Ever thought about owning a real estate brokerage? Maybe you can make twice as much money, or maybe you'd have twice as much headaches. Well, today's guest, Mark Norman, has figured out how to blend owning a real estate and mortgage brokerage for over 20 years, and he's done it very well and created a great business for himself. He's based out of St. John's, Newfoundland. He's with Premier Mortgage and been in the mortgage and real estate business for 20 plus years. And I love this conversation with him. In this, we talk about his unique business model and his perspective on why he owns both. We talk about why transparency is becoming so important to not only mortgage brokers, but also real estate agents, and why understanding market cycles is the key to longevity in this business. I think you're going to enjoy this conversation with Mark. And if you've ever thought about wanting to do this, this will be a fantastic primer for you. Hey, I'm Scott Bagford. This is the ILMB Mortgage Brokerage podcast, the number one podcast for mortgage brokers who want to scale up their mortgage business. And as I always say, you want to cheat on the test to learn something you want to learn. Someone else already knows it. So hopefully you enjoy this conversation, and I will be back at the end of this episode. Hey, Mark, welcome to the show.
Thanks for having me.
Thanks for letting us come into your office and take it over with all of our gear. And so maybe before we jump into some stuff that I want to ask you about, tell me a little bit about yourself and how you got in the mortgage biz.
Well, it's 20 years this year. 2004 is when I started. And I had a friend of mine. I was working in the car business, actually. I was a business manager at a VW Audi store here in the city. And he wanted a protege. He wanted somebody that was going to take over where he left off. He'd been in the business for 20 years. And so I kind of came in underneath his wing. And at the time, we were part of a large real estate company. We were like the sister company for that, support company for a big call banker franchise at the time. Went in there, learned the ropes from him. I remember him telling me the frustration of the early days. It was so overwhelming because there's so much information to realize.
How long ago was that?
20 years.
Okay. 2004.
And so fresh out of the car business where, your head was everything rolls today or, gets done. We start the transaction and it's done in an hour, whereas real estate was so different. So there was a learning curve there, but just the way that the lenders and the amount of information that one had to consume to be able to advise properly, that was heavy. And I remember him telling me at the time, he said, once the light switch goes on, it never goes off. And I was probably 2 years in before that light switch kind of went off. And I was like, now I see it. Now I understand how to do this. And, it's been a learning game ever since. But yeah, it's been a fun ride to get to.
It's gotten more complicated too, as you know. In the last few years, it's crazy how much more complicated, even just underwriting and lending, and it's very complex compared to when I started. I used to joke, the stuff we used to do I just started in 2006. So half of it would be illegal today. If we tried to be like, you can't do that. You can't do it. I'm like, what? So you have to adjust with the time. So tell me, what you got a very unique business model. So you're based out of St. John's, Newfoundland, and I am out here in I love the East Coast, but tell me about, you've got a real estate company and a mortgage company. Tell me about, when did you start the real estate company, and what are the pros and cons of owning a real estate company as well as being a mortgage broker? Because I can guarantee you there's mortgage brokers out there going, oh, this would be a perfect, thing to do. And symbiosis, could. But so tell me about that.
Well, I think my original foray into real estate stemmed from the frustration of never being in control, no matter how much you did for realtors and no matter how much you would, whether we call them spits or just little value adds. I mean, I remember, back in the early days, my mentor, he was also the owner of that real estate company. And I mean, these guys would come in and they would make $250,000 a year, and come tax time, they'd be broke. And the mortgage company would be lending them money, personal, to help them pay their taxes. So it was always, you couldn't give them enough.
Right.
Just take. So my foray into that sort of frustration stemmed, I guess, about 10 years ago. And me and a business partner of mine who've been personal friends for, this year, 30 years. And we just said, let's go out on our own. Let's do our thing. And I've had enough business on the go over that 10-year period that I didn't really worry about other realtors, whether nobody was sending me business, it just didn't matter. My phone rang just from databasing and making sure that I was always connected to my clients. The other realtor who wanted to recommend his guy, these guys were loyal to me. And most, you do have some greed, obviously. But so we went out on our own and we had a different brand. We went in under our own names. We went in under Norman Lane Real Estate. So we went through that for a couple of years. We decided that NL Real Estate would be a better
Right, because it's got a double entendre.
It did.
Right.
And the thing is, if a regular person went out and did that, they wouldn't be allowed to do it just because our names were NL. But if any other realtor in the city wanted to do that and name it NL, they couldn't.
Wouldn't work.
And they just said, listen, it's only because your names are NL and you shorten your name to this and it's a double entendre that will allow you to do it.
Yeah, that's clever.
But we determined that there was a little less value proposition for that as well. So my business partner and my new partner got together, went out for lunch one day, came back with this concept of 4%.
Because it's 5% here, right?
It's 5%. And then, we had a discount company come in here in, I guess probably 8 or 9 years ago now at 3%. And the difference was, the 3% model.
My dad would call it tree. Yeah, it's 3%.
3%, absolutely. But like 1.5 and 1.5 for the realtors. It's really hard to cover your costs. You need to increase your volume by about 60% to offset the losses you take when you pay. And the thing is, the realtors out there, and nobody's coming out and saying this aloud, but like realtors don't want to sell houses for 1.5%. Mm-hmm. They've been walking through houses with these clients for 2 months, 3 months to get their paycheck cut. Right. Made no sense. So we flipped our script and said, let's try and create a 4%, not 2 and 2, what people think it's going to be. Let's create 2.5, 1.5. As the listing,
I would not have guessed that.
As the listing agents, we take 1.5 because again, it's fixed operation, it's photos, it's for the most part, it's a loss leader to pick up buyers as well. But we wanted to control the sale. The idea is
clever.
Make sure that,
and then the buying agents are you're spiffing them, if you will.
Yeah. Well, you're paying them a full commission.
Right.
So they're not against your 4% model, whereas they are against the 3% model. They would be what we found. And one of the partners came from the 3% world. So he came over and basically said, there's guys I haven't heard from in 5 or 6 years that now my phone's ringing with our properties. So realtors control the sale. A lot of times they control it. So we looked at it as this way. When we pitch it to a client, it's true to form. Let's list it with 3% and you'll get 2 offers. Maybe it's 100, maybe it's 1,000 or 2,000 above asking. So you've got what you wanted, but now you've only had 2 offers on that property. When we're paying 2.5 commission to outside agents, you might have got 318 or 319 and 5 offers for that property. So did you save, $2,000 or $3,000 or did you lose out on 15,000 more?
Right.
And so when you explain how it works to home sellers, they're like, oh, this just makes sense, guys. So it's really simple to talk them through it and understand why, because they've probably seen their neighbor's house that was listed with 3%, went down, came up on the Royal LePage and sold, a week later.
Right.
That's the reason why. So as you explain that to them, they're like, that's clever. That makes sense. So we're a little over 1.5 years in, and we're starting to attract new agents that are looking for a value proposition because realtors in general, whether it's RE/MAX or Royal LePage or any of the major brands, our value proposition is in our name. Right. 4% real estate. Think of the millennials, we'll say young millennials, Gen Zs, people who are just going into their first time home or selling their home for the first time. These people don't want to get on the phone and negotiate. No. They want to know the price before they walk through the door. Like, these are the kids that are buying $47 door dashes,
Right.
That sort of stuff, and not even looking at the price. Right? You know what I mean? So, but just imagine if somebody who's of a little more social anxiety, doesn't want to negotiate, if your value proposition is in your name, you're ahead of the game.
Right. That's so good. Because one of the things you've seen the NAR settlement in the US where they're basically saying you can't, did you see this? Basically what they did is they sued all the real estate companies saying that it was price fixing, and all the real estate companies had to pay massive fines.
Right. I have read
because of the buyer agreement. So now they're not allowing them to put in a buyer. Like, you can't do a split commission thing. So you as a buying agent, you got to negotiate that with your buyer, your customer before. The problem that I see with it is that it's good. People aren't good at negotiating. To me, Facebook Marketplace is a perfect example of why most people are better off with a realtor representing them than trying to do it on their own, is because they're going to get, they're dealing with a professional. Yeah. They're going to get screwed. Like, you need somebody representing you, I think. And I think what they've done is it's a travesty. And then one of the guys who sued them now started a low fee model to go out and look at houses. Yeah. So like, these guys are the whole thing is just snaky, Yeah.
And the Treb is going through some different changes I've seen too.
Yeah. So there's definitely some stuff going there. Oh, back to you saw NL real estate. So I knew there's a guy out of where I live called TD Benefits. His name is Tom Dias. And so his company was called TD Benefits. Well, TD Bank, of course, is like, get rid of that name.
Copyright infringement.
And he's like, no, he's had it longer, right? So this was even before TD Canada Trust. He's had it for like 30 years. He's like, I'm not getting rid of my name. And he kept the name. But when I seen his name, I thought, oh, this must be but they
no green chair.
No green chair. But the thing is, they couldn't take it from him because he said, back to the name thing, he didn't do it. He did it before them. And he had the initials. It was like, well, it's right. He is Tom Dias, TD Benefits. Yeah. And so back to but the 4%, when you explain it to me, it makes way more sense than trying to have like a large brand like that. So for you then, it made sense because you had a 10-year business you've been in the business for 10 years. You only probably work with a small number of real estate agents. How many real estate agents work in that part of your business versus the mortgage side?
So right now we're up to 6 agents. We're looking at, I'm hoping that we might be at 11 or 12 by the end of the year, just because we're talking to some teams who are looking to make change and let's see what happens. Like by the end of 25, I'd like to be at 20 agents realistically.
Right.
And then it's now you have,
and you must have a partner you have somebody that is sort of like as the principal broker or the person who's looks at the contracts and stuff in that whole thing, because that's a whole other world, right?
Well, I've got 2 guys who are doing all of that stuff. Those are my partners on that side. And so they're looking at the recruitment and retention and trying to build out, sort of a scalable asset that perhaps, and we bought every 4% URL we could possibly imagine. If you could dream it up, we own every 4% URL.
Yeah. So maybe you expand outside of this region and go into different markets and stuff.
Exactly. So
if you're listening, reach out to Mark. If you're a mortgage broker and you want to, it's something you're interested in, this could be an opportunity for people.
We'd love to look at partners to help us grow. If they had a concept that wasn't working, to establish something. And we'd like to have and we're working on some proprietary software, things that we can have to agents that are, all-in-one CRMs, put it all together for them and have it branded as our sort of 4%. Again, now you've got a business in a box. You can scale and then unpack in any city based on their regulations and what have you. But we look at doing that or bringing on sort of people who would do that for us. Right.
That's great. Okay. So talk to me about your mortgage business. And it's been a very different market this last year and a bit. Like I was in the business in 2009 when, the last crisis, and it was actually for us, I didn't find it that bad. I just switched from purchases to refis because, as you know, rates started to go down and I went 70% refi business. And
we lost all the discounts on the variable back then.
Yeah. But
we went from prime minus 90 to prime plus 90 in about 60 days.
And so, but every market, I feel as a mortgage broker, there's more opportunities for us as a real estate agent. Somebody needs to buy or sell to make money, but on our side, like as long as they're borrowing money, we have opportunities. What have you changed, or what's an improvement you made in your business in the last 6 to 12 months?
Well, to your point where, business went down or whatnot, or it's been a challenging year, Newfoundland has an inverse cycle from the rest of the country. So when the rest of the country is on fire and not doing well at all, Newfoundland tends to soar. Mm-hmm. So back during that era of 08, 09, that era was probably our most prosperous era.
Really?
So while the rest of the country was, again, in shambles, we saw the most growth.
So what do you think that is?
Well, again, we don't have, the idea of having like plants laying people off, because we don't have plants.
Right.
For the most part, we're not affected by the things that would normally like trade. Like there's not a whole lot of trade besides oil. Mm-hmm. Oil is a global commodity. So therefore it makes no difference. Oil is going to flow wherever. So we just never had the same sort of thing. And I think over the past couple of years, you saw the mass exodus from the major cities like Toronto and whatnot, and people moving into.
Yeah, they take all their winnings or what they've made on
their net gains on their primary residence.
Yeah.
Go into Halifax or go into Moncton or Fredericton or whatnot. And that's what we've seen. We've seen a bump in the Atlantic provinces and the Maritimes that blows my mind. From price of housing was more expensive in Newfoundland up until 2021 than it was in Halifax, 22 in that era. So now price of housing in Halifax has really should say exponentially increased. But I think Newfoundland's next to pop. And as I'm telling clients this today, I'm like, here's the thing. We go through an inflationary cycle like this. Every time there's been an inflationary cycle of this magnitude, and we haven't seen it since the early 80s of this magnitude, we will see exponential growth on our pricing. As rates come down, watch the vacuum get filled with the pricing going up. Because like when you talk to a client, you say, listen, there's no perfect time to buy. It's not like, well, rates are going to come down and it's going to get less expensive because now if I was paying $2,000 a month or $3,000, now it's going to be 25. No, that vacuum is going to be filled. That house that was $400K is now going to be $500K, and the payment's the same, even though the rate's cut in half.
Mm-hmm.
It's like, that's what we're expecting, because that pop will happen here the way it happened in the Maritimes. That's what I'm expecting to see over the next 12 to 24 months here.
So you guys are very optimistic about have you been doing more refis and renewals and stuff? Have you seen that increase in your business?
Yes.
And what has worked for you in that segment? Like, because like the I don't know if it's like out here, but the banks have been very aggressive in a lot of markets in terms of, trying to keep those existing clients. And so have you found that here, and what has worked for you guys?
Banking business today, if I can get the opportunity, if I can have a conversation with somebody, getting the banking business is like taking candy from a baby.
Mm-hmm.
And the reason being is because I know their problem before they even start to tell me their problem when they're talking to their bank. And the lack of experienced people inside the branches today, I don't know how it is in the rest of Canada, but branches do not look the same as they once did.
Mm-hmm.
My mother was a 40-year banker. So when you walked in there, it was all women in their 40s and 50s and whatnot. You walk into today, it's kids out of university.
Right.
And it's their first job. So the skill set's not there. Communication's not there. When you talk to somebody after the frustration of 3 weeks trying to get something done, no one will call me back. And I go, yeah, send me your application. I'll have this approved for you tomorrow. They're like, oh my God, that was so much easier than it would have been if I'd gone through my bank. And I explained to them, like, if you are any vintage at all, above 30, 40 years old, you will know that the banks just don't look like they used to, and the service is not there.
Mm-hmm.
Sometimes you'll see somebody who's 32 running a branch. Why? Because he started there when he was 27. Everybody else left, and he's the last guy standing, so he gets to be the manager.
Right.
So that's not typical of, previous generations.
Right.
So
yeah, there's a knowledge gap there for sure. I mean, and even as you know, the complexity has gone up in lending. So then it's actually gotten harder, not easier, to be good at this job in terms of what the scope and breadth of information and things you need to know.
The uphill climb, like you said, back in the day in 2006 or whatever, the things you would do back then would be
Remember the flex
today.
Equity?
Oh yeah.
I love that. Yeah. That was the best.
I remember I remember doing seminars here in the city at the hotel you're staying at in their ballroom, and, talking about 100% financing and 40-year amortization and stuff. And, it was a walk in the park. In retrospect, I should have bought as many houses as I could have back in that day, but it was a scary product because it was 100% finance plus your CMHC premium. Now you were 106% deep into the property. But in retrospect,
you would have made it like a bandit.
On the long-term scale, you would have been way ahead of it. Yeah.
Yeah. Okay. That's interesting about the difference in the market. I met a guy when I flew out here, and he was telling me he built some 3 duplexes last year, and every one of them is rented, no problem. And I think this emphasizes the importance, or the real estate is very regional. And when you see the news and they're talking about real estate, it's often Toronto, or, it's usually the big market, but that doesn't necessarily
aggregate, right? Yeah. So you use the aggregate like that. And I tell people when they watch the news. So let's say my clients here in the city, they watch the news and they say, oh, I heard this on the news. I'm like, just imagine if you had a national forecast.
Right. Oh, that's a good way to think.
Right. So if you say like the national market,
the national average of temperature is this, but man, it could be very different. Right. If depending where you are.
So if you said the national average of weather today is going to be 28 degrees and that's 4 here.
Right.
Would that be applicable to you? And they go, yeah, I guess you're right. I'm like, let me unpack what's going on in Toronto. Let's go, and that's across the country. So that's an aggregate number that people don't typically, attribute to their own regional, unless you're GTA, unless you're Vancouver or,
one of the major markets, then it'll come up. So what have you found in terms of, so it sounds like your guys' market's doing well here. Is there anything that you've done different in the last couple of years, or like changes that you've made to your process that you found to be helpful?
Well, I'll tell you, one of your questions was, what's your superpower?
Mm-hmm.
And we just talked about how, it's gotten more difficult. Well, I guess at this vintage, and my newly minted hitting the 5-0 on my birth certificate, I'm more inclined to pass on business that doesn't fit what I like to do.
Mm-hmm.
And so it's gone from, in my 30s and 40s, I would do every deal. I would dig in the dark in the night. I would stay up late. I would read. I would argue with underwriters. I would solve for X.
Yeah.
And sort of you wore that as a badge on your sleeve.
Mm-hmm.
You were the guy who could solve every problem. Today, I just don't solve those problems anymore. And I find that financing today has gotten so much more specialized. as in like, I'm very lucky to be part of the Premier Mortgage Network, who has, very specialized people in there, and I can refer that business off to those people. So my superpower is to say no. When I look at a file and I see how complex it is, I got to say, do I want?
So what would be the type of client that your ideal client?
Typically, I don't do a lot of B business anymore, and I don't do that stuff where let's do a credit rebuild. So that 3-year sort of waiting period to rebuild somebody's credit post bankruptcy, what have you. I refer them off to other agents because I don't want that. Again,
I understand what you're saying. But you also there's more opportunity to specialize in this market given the increased complexity.
Well, I'll tell you, my day, girls here in the office, they laugh at me because they say, you're 10 to 2, you're part-time, you're semi-retired. And I laugh and I'm like, I get all my work done and my assistant, she gets all the work that needs to be done in that sort of breadth of time of day or whatnot. And I like that. There was a time when I would come in here at 8 and I'd leave here at 8. And once you extrapolate how much time you put into the files that you didn't enjoy, I found that I probably lost 20% of my revenue, but I gained back 60% of my time.
Right.
So
it's a good trade.
That's for me. I learned to live inside that world and I have other businesses. We own a couple of restaurants and, we have the real estate company and stuff as well. So
what restaurants do you own?
We own a couple of quesada, burritos, and tacos.
Yeah.
My brother runs them here in the city. But they were an investment for us to have something outside that was a saleable asset in the long term that maybe 5 or 6 years from now when I'm ready to hang it up, move to Costa Rica or something, I'll have either a cash flowing asset or a saleable asset, one of the two. Same thing with the building that we're in. I bought that building so that building would pay me in retirement for many, many years to come.
Right. So
yeah, like there's certain the chase. And I mean, I was the guy. I love the chase. The chase to the yes. And as I get older, I decided I'm going to chase the stuff I love and I'm going to pass on anything that doesn't give me the joy. Like I love seeing good people succeed and get, if there's something that a person that I really want to work with, I might bend my rule for them.
Yeah.
For the most part, when my phone rings and I go, you know what, this is not a file that I'm going to be able to solve in 2 hours.
It's like a 2-hour rule. If it's not something you can do in 2 hours, it's like, I probably don't want to do it.
Yep.
And you're at the point where you don't need to.
And sometimes you make the mistake of taking on some of those where you get the spidey senses and you're like,
I knew it. And
then 6 hours deep, you're still trying to search for it. And now you're so deep, you don't want to let it go.
Yeah.
So like sometimes you're
the sunk cost fallacy. The more time you spend on it, the harder it is to walk away too.
Yep. And so but like I said, you write this long, your spidey senses tingle. And you get to know what you're going, that sounds like it's going to be a lot of work. And you'll pass up somebody who's only too happy that they didn't have to advertise and get their phone to ring to find that client.
Well, I tell people if you're brand new, you say yes to everything because you don't even know really what your specialty will be. And then over time, you start that list of no grows. And so you start off with, I tried everything when I started. I would take any loan. I remember when I put one together, we included an RV in it in order to make it work. Like I was just like, this is so creative. It was so fun. But not every one of those files worked. But man, I learned a lot in those files. And so I would say if you're at the different stage in your career, absolutely you need to be saying more no. But if you're brand new, say yes to everything and may take a swing at it.
Absolutely. Well, you can't learn without it. Like I said, I've learned, and then you get into something. The things I know are not the same as the things I knew.
Mm-hmm.
So everything has changed. And I go, you know what? That's like me fumbling around in the dark for hours with no switch, trying to find the switch to turn it on. I'm like, I don't want to do it.
Mm-hmm.
I wish I could say there was, some other purpose, but at the same time, I bought my time back.
Yeah.
By sacrificing those deals, I have put pick up my daughter from school, at 3:00 and like, I don't have to not spend time with her or make excuses for the things I have to do to not be with my wife at home and I remember that tore apart relationships because I was so deep into my work.
Right.
And today I don't have that. I get laughed at. They're like, oh yeah, you're, go in at 10, go home at 2.
Right.
I mean, I might still answer emails till 5, but at the same time,
yeah,
you're not in here grinding 24/7 like you once were.
Right. Any other advice you have for somebody listening that you'd say, what would be your advice to your younger self if you were starting over? What would if you were to go back and tell the young Mark, do these things, what would it be?
I wish I could say I would change something, buy Bitcoin. I definitely would have done that. I didn't buy them.
And Apple
enough.
Stock and real, like pretty much anything you would have bought would have been fine. But yes.
Well, I had a friend of mine who was very deep into Bitcoin when it first started. And I remember him telling me, like, Mark, just throw $500 at us. And this is 2010. And so we did the math on that. It would have been about $22 million.
Oh my goodness.
But yeah, what do you do, right?
Yeah.
Live and learn. I didn't want to part with the $500 back in the day. You know, I had such a good mentor. I had such great people around me. I worked with some incredible people. I don't know if there was anything that I would say, you know what, there's the defining thing that I would have changed in all of my time in the business. You know, going to the national conferences and reaching out and, you know, attending and being involved in as much of the industry as you can be involved with is so important. I started going to the conference, I think, in 2007. And I guess COVID was the only ones that I hadn't attended in all those years. And the relationships and the people that I've met in that period of time, people who helped me with no skin in the game to help me, would go out of their way to help me. So I've met so many great people over the years. Some became mentors, some became good friends, you know, and they're people you look for when you land. When when you're in Montreal or Vancouver or whatever, you're going to see these guys, you can't wait to connect. So I would say if you really want to grow in your business, that's the little tips and tricks I learned from, and you can't get it from online.
No,
because the social aspect isn't there. If you're breaking bread or having a few drinks or what have you with other people who are in the trenches with you on a daily basis, that camaraderie and that shared sort of aggravation and struggle, I found a little tip that I could do this. Oh man, that's amazing. Never would have thought of that. So that part of it was, you know, it's one thing to go see Benjamin Tal tell us, you know, give us the lowdown on what's going to happen next. But it's another thing to be having dinners and stuff. And so people will often discount that and say, well, no, I'm not going to go to the conference. I didn't get enough out of it last year.
I think at least half of the value of those things is the people. It's the other attendees that you get, is if you're intentional about conversations.
If you're an introvert who doesn't want to spend the time with people and you want to go to do it online. But if you want to grow your business using the people that are there for you to help you move your business forward, they hand it out like candy. It's free.
Right.
And again, you sometimes in different ways, you're paying them back the same way because there are little things that you would have known you pass on to them. If I didn't think of that, man, that's amazing. So like that sort of reciprocal.
The collaborative piece of it.
Yeah.
That was why I started the podcast, actually. I'd go to conferences and I'd meet people like Peter Matheny and other guys, and we'd be sitting having a beer in the lobby. And I was like, the conversation is amazing. How do I do that without having to go drink that much beer in that many lobbies? And so then it was like, well, let's just do it this way. And I found that the amount of people, awesome people I've met, and the insights from it have been just invaluable. So
you never know where the conversation is going to lead you. And that's where it's sort of intangible that when you go to the conferences, it's beyond the education part. It's the high fives and the handshakes and the hugs that come afterwards from the last time you saw them, and they want to spill the tea. Right. If you're in a room full of your peers and friends and family, they're not excited about, the new HELOC that's coming down the pipe. Did you hear about this? Or, that the statistics and your day. But these people that you're with there, that's their drive. That's what they do. So you can really enjoy the back and forth and the learning from that.
Mm-hmm. Yeah, it's awesome. Well, hey, Mark, thanks for letting me come chat with you and for sharing. Where can people find you online?
They can find me at mark-norman.ca, or my latest foray is thelowestrate.ca. And it's not what it sounds. It's more of an education website that lets people know that the lowest rate is more than likely not the best deal. And just sort of the difference.
It's the opposite.
Yeah. So when people are calling you looking for,
it's like when somebody says, don't read this. And then I got to read it. It's like,
so if they find me through that channel, through one of the websites, it's just that, you know what, value is always in the middle, right? Nobody wants to buy the most expensive. Nobody buys the cheapest, because obviously the most expensive doesn't have enough value. The cheapest doesn't have enough value, or has too much, what have you.
Yeah.
Value is made in the middle. And this is where it's just sort of an education website to say, if you see a competitor that's saying, here's the lowest rate, and it's 20 points below, there's a catch. Mm-hmm. You're losing your prepayment penalty. You're losing your this. And all you need to do is have a conversation to determine the next time, you're breaking this mortgage? What about the next time you break it and it's a 14 or 18 or $28,000 penalty, whereas the other mortgage is three months interest. So just having conversation that people don't know what they don't know. So that's where I kind of derive that site.
Yeah, that's awesome. Thanks, man.
All right, great. Thanks.
Hey, thanks again for listening. And, hopefully you got some insights from my conversation with Mark. And, the one thing I love about having so many different perspectives and different models is that you can find something that works for you, your personality, as well as your market opportunity. And I believe that the trick to this business is to match your personality with your market opportunity. But then, of course, and then apply some foundational tactics to whatever that looks like. And as I always say, there's no problem in your mortgage business that someone else hasn't already solved. Hopefully, this episode has provided you some of the answers to problems that you may have. Thanks again for listening. I'm Scott Peckford, and I will see you on the next episode.